Hey, good afternoon, traders. This is Trader Tim from over at eminimind.com. Today is Monday, August 28th, 2017. Going to do a Monday market analysis video to kick off the week. If I were to sum up the week into a one phrase, it would be here we go again. We've got the two 50s, one above us and one below us. And so when we get into this situation, just like we've seen throughout a good portion of the summer, a number of times where we're in this situation where we trade down at a long, then we rally, we trade up to the short, then we sold off and traded right back down to the next smaller daily long, back up to the daily short. What we want to be doing in these instances, rather than buying or selling in the middle of the range, want to be looking for shorts at the top of the range at the 50% daily short, and looking for longs at the bottom of the range, the 50% daily long. So that range is currently 24.35 to 24.50. And then once the swing high breaks at the 50, and we get some movement outside of the range, we'd be looking for a break of the 61.8, either of the long or the short. And oftentimes what happens when you have two 50s like this, and then a smaller daily pops up in the middle, we can, kind of get tighter and tighter and tighter, and then have a move back down to the bigger daily long. So even if we break down below this 24.35, 24.20s would be another opportunity to look for a long setup. And we just kind of keep playing it back and forth until one of the 61.8 breaks in the long or the short. This week we've got a couple of news announcements, kind of the usual stuff on the tape, consumer sentiment, and then Thursday and Friday have a handful of announcements coming out as well. So there's definitely some catalysts to be moving the markets around. If we run through the Topline Figures, ETFs, looking at the volume, we can see on the SPY, kind of market just kind of moving sideways here near these previous highs, acting as sort of a support level. Dow, basically the same trend, not huge volume, just moving sideways in the last few days. The Nasdaq also in the same fashion, and then the Russell is once again the weakest, getting a little bit of a bounce here, but none of the top-line figures have come up and broken their swing highs. So even though we've had a little bit of bounce, it's on light volume, and I would expect another opportunity to roll over here as we touched yesterday, on Friday rather, 24.50s, sold off a little bit today, and then maybe make a move back down to the 24.35 level. Now we've got these opposing tails. This isn't a huge range, only 15 points, so we could very easily go from the top 24.50 down to 24.35 in one day's time. And one thing I wanted to talk about that I had a couple of questions on over the weekend, when we get in a situation where we have a large 15-minute level, or an hourly level, or just any sort of level that's, a bigger time frame. When we get in a situation where the distance between the 50% and the 61.8 is larger than 6 ticks, or by the time you put your order out just in front of the 50, and you want your stop, a 6-tick stop in this case on the ES, to be outside of the 61.8, if that distance is more than your stop size of 6 ticks, the question is, what do you do? What I like to do, rather than blindly enter at a larger 15-minute level, especially if it's the first setup, the first big 15-minute level. And when I say 15-minute level, I just mean, visible on a 15-minute chart or a larger chart. What I like to do is draw that level up and then zoom in, allow the market to trade at that level, and come to the 512 tick chart, let the previous swing low, in this case because it's a short, get taken out, and just draw up the first short, in this case because the larger level is also a short. So I want to be drawing the same direction on the 512 chart as the larger time frame. And just take that first setup on the 512 tick chart instead of blindly at the daily level. And that can help reduce your risk, allow sort of the market to kind of show its hand, identify, okay, this level is or isn't going to be respected. And in this case, it was today. We broke the little swing low here, and you can just zoom in and take the first setup on the 512 tick chart, and then trail swings on the way down. And you can also use the target of the larger 15 minutes. So you can enter on the 512, but then keep in mind that we're at that big 15-minute level. So you can come down here and use the larger 15-minute target and try and trail your stop down to that target. Going into the week, some back and forth is expected, but when we get these situations where we have long tails, keep in mind that typically, if you form a hammer or if you form an inverted hammer, in order to do that, the market has to move strongly in one direction and then retrace back in the other direction. So even though at the end of the day, the last 4 days, we've seen opposing tails, indecision, kind of right in the middle of the 50% short and 50% long, right in the middle of that range. Well, intraday, there have been some good opportunities because the market is moving, and the ranges on the day have been between 10 and 15 points, and then coming back here, we had about 21 points on the bigger body move up. So there's been some good opportunities. Going into this weekend, we've got a 3-day holiday weekend, so keep that in mind. A lot of times that Friday is pretty slow. But when we come back from the Labor Day holiday, September, October, November, into December, we should be in for some really great trading. Typically the spring and the fall are the best opportunities throughout the year. So we'll be doing live trading tomorrow morning. You can check that out at emoneymind.com/VIP. We will talk to you in the morning, and have a great week.